Welcome to the Finery Markets Institutional Weekly. In this episode, we explore Coinbase's strategic acquisition of Deribit and Stripe's global stablecoin initiative, alongside Bitcoin's surge past $103,000. We'll analyze Solana's technical advancements targeting institutional-grade performance and unpack significant regulatory shifts, including the OCC clearing U.S. banks for crypto activities and new legislative frameworks, while also celebrating Finery Markets' record-breaking volumes, which reached $6.9 billion in the first 4 months of 2025. Join us as we examine how these developments are accelerating institutional crypto adoption across global markets. In a landmark move, Coinbase has acquired Deribit, the world's largest crypto options exchange, significantly expanding its derivatives presence. The merger strengthens Coinbase's position as the global leader in derivatives trading, while providing more stable revenue streams that can help offset volatility in spot markets. Stripe has made a bold move into the stablecoin space, launching financial accounts in more than 100 countries. This initiative, building on their 2024 acquisition of Bridge, specifically targets regions grappling with inflation and capital restrictions, such as Argentina, Turkey, Colombia, and Peru. With the stablecoin market now exceeding $231 billion, these accounts enable users to send, receive, and hold USDC and USDB, effectively providing dollar-based financial tools to previously underserved markets. Finery Markets has demonstrated remarkable growth, achieving $6.9 billion in trading volume from January to April 2025, a 92% year-over-year increase. This marks an all-time high in performance, with Finery Markets now serving over 140 active institutional clients. Their non-custodial OTC infrastructure continues to attract traders seeking reliable venues for stablecoin and digital asset trading. Bitcoin has shown strong performance, surging to $103,216 after recovering from an April low of $75,000. This 33% rally has been primarily driven by institutional investment, with Bitcoin ETFs attracting $3 billion in inflows. Corporate buyers are also increasing their positions, with Strategy adding 1,895 BTC at an average price of $95,167, bringing their total holdings to 555,450 BTC. Semler Scientific has emerged as the fourth largest U.S. corporate holder, after acquiring 167 BTC. With exchange balances shrinking and whales accumulating, Bitcoin appears well supported at current levels as institutions signal long-term conviction. Solana is making significant strides in scalability with its Firedancer upgrade. The upgrade aims to achieve an impressive 1 million transactions per second with 400 milliseconds finality, far exceeding Bitcoin's 7 transactions per second, and Visa's approximately 65,000 transactions per second. This positions Solana as a potentially attractive platform for institutional-grade services. The enhanced architecture promises improved speed, security, and validator diversity, potentially establishing Solana as a backbone for global financial infrastructure capable of supporting both decentralized and traditional finance operations. Deutsche Börse's FX arm has launched 3DX, a MiCA-regulated digital asset exchange for institutional investors. This development underscores Deutsche Börse's commitment to leading the institutional market structure transformation in the crypto economy, particularly within the EU's regulatory framework. On the regulatory front, the U.S. House Financial Services Committee has introduced a comprehensive draft bill aimed at creating a clear market structure for digital assets. The legislation, released on May 5th, proposes decentralization tests, removes investor income thresholds, and establishes joint SEC-CFTC oversight. Industry leaders, including VanEck's Matthew Sigel and Paradigm's Justin Slaughter, have praised the bill as a significant improvement over previous proposals like FIT 21. If enacted, this legislation could position the United States as a global leader in crypto regulation. The Office of the Comptroller of the Currency has made a significant policy shift, confirming that national banks can now directly engage in crypto trading and custody services. This reversal of a 2021 requirement opens the door for traditional financial institutions to offer comprehensive digital asset services, including settlement, exchange, and tax-related reporting. The updated policy, issued in March and recently reaffirmed, maintains strong risk control requirements while potentially accelerating crypto integration into traditional banking services. In a notable regulatory development, internal communications have revealed that the New York Attorney General urged the SEC to classify Ethereum as a security during its 2023 case against KuCoin. This disclosure, part of Coinbase's transparency campaign, relying on FOIA disclosures, highlights the ongoing regulatory uncertainty surrounding Ethereum's classification following its transition to proof of stake. Thanks for tuning in to the Finery Markets Institutional Weekly. To stay ahead of institutional crypto market trends, subscribe to this podcast wherever you get your audio content. For more in-depth analysis and exclusive insights, follow Finery Markets on LinkedIn. See you next week for another essential briefing on the institutional developments shaping the future of digital assets.